Welcome to this last session of the morning and of the events. We are going to talk about capital markets and their role in the growth and also the diversification of Kuwait's economy. So let me introduce you to our panelists. Noura Al Abdul Karim, who is the head of markets for Bursa Kuwait. Firasem Aloda, who is the Deputy Director General for Finance and Investment at Kuwait Foundation for the Advancement of Sciences. And we also have Emma Raghu, who is Executive Vice President Research at Markaz. So thank you to all of you for joining the discussion.
Thank you.
As I said, we are going to talk. Thank you again. So we're going to talk about capital markets. Very important year in terms of capital markets. This has been a very important year on a negative side for pretty much the whole world. But for Kuwait, if we can try and look at the very few and very little silver linings, for Kuwait, this has represented a bit of a turning point because the stock exchange listed. And your stocks also were included in international indices, which is a big advancement in terms of the attractiveness that Kuwait stocks have with international investors.
So Kuwait experienced one of the steepest GDP fall in 2020, and that is not just unique to Kuwait. I'm sure the economic numbers look bad for other emerging markets and developed markets as well. The inclusion of Kuwait in MSCI index with 0.58% weight is a very, very defining moment for our capital markets. Definitely that's something to celebrate about, and also the listing of Bursa Kuwait. Kuwait hasn't been performing well. The market in 2020, it's down 8% for the year. It missed November super rally that happened almost with all other markets. The valuations look stretched due to earnings contraction of blue chips. But as I said, this is not very unique to Kuwait. Almost all markets in the world today are experiencing very pricey valuation thanks to earnings, lack of earnings growth. So going forward, what I would like to hope for is a great investor interest, foreign investor interest on the back of MSCI inclusion. Not only the 2 billion passive money that is expected to come to our market, but also a lot of active money, because Kuwait, being one of the not so good performers so far, might be of interest to foreign investors at this point of time from a rotational trade perspective. So foreign investors are having a hard time finding bargains, but Kuwait could be one, as we can see, provided we see some comeback in earnings, which is very good. When we talk about capital markets, equity is one part, but the debt is equally a very interesting angle to the capital market as well. And there has been a lot of action on the debt side in GCC, especially on the sovereign side. Both sovereign and corporate put together, we had more than 100 billion of issuances in 2020, one of the busiest debt market years in recent memory. And this has been equally split between sovereign and corporate. Almost all sovereigns are very active in the debt market, Saudi Arabia, Qatar, and everyone. Kuwait is not able to participate in this because of the debt law. Hopefully we should cross that barrier soon, and we should expect Kuwait to also come to the sovereign market. But the corporate issuances, debt corporate issuances in Kuwait has been extremely strong. We have NBK, NIG, Bobian Bank, KIB, Warba. We have so much happening on the debt side, and the pipeline also looks very good. The debt market is also on a YTD basis for GCC is up by 8%, which is quite. I see a very stable CDS spread trend, which is the indication of the risk perception. And obviously, even for credit rating strained economies like Oman and Bahrain, the CDS spreads have been very subdued. And that's a very good news on the debt side. So when we talk about capital markets, I think our focus should be equally on both debt and equity. And Kuwait is definitely on a sweet spot in terms of debt. And in terms of equity, I believe because of its attractiveness at this point in time, rotational trade from foreign investors looking for bargains can be a very interesting expectation from my side.
Probably a question for everyone. So it's importance of attracting foreign talents and also attracting foreign direct investments. That's we could go back to Raghu, so you can give us the view from the broader financial center perspective. And I wonder also whether Noura, and then back to Firas, if you also would like to comment on this.
The aspect of talent will be very critical, human capacity building, in order to achieve the transition that we are desperately hoping for from an oil economy to a non-oil economy. I think if you boil everything down to just a one-liner, that would be it. It all boils down to human capacity building and talent building, and Firas' point is absolutely taken, and I think KFAS is at the center of that key objective. It's long term. It's not going to happen tomorrow, but better. The speed should be much faster, especially when it is long term. We will not have time to really move about it. Actually.
There is a question that is very interesting from my perspective, which is around sustainability, and it's a question for you. So, what can and is the financial center doing to provide shareholders and investors, local or international investors, with information around ESG factors when it comes to QA and more broadly sustainability? And of course, this also opens up and leads us to another part of our discussion that would look at diversification for the economy. But let's start specifically with the financial center and what you are doing to again address these concerns or these opportunities even for investors.
Yeah, that's a very good question because the development of the ESG and sustainability in the global sense has been phenomenal. But in the emerging market space, they are yet to gain some sort of attraction. Let's take sustainability as a concept, and we integrate that aspect into the equity research process. When we research a company, we want to see how sustainable that company's business model is 3 years from now, 5 years from now. So that has some sort of a connect, though indirect. But on the ESG side, environmental, social, and governance side, I think it's beginning to take shape, but I still feel that it's early days for Kuwait, primarily because the market is still, dominated by retail investors. So it's very important that we have institutional investors gain control of the market for concepts like ESG and sustainability to take off. Inclusion of Kuwait in the MSA Emerging Market Index is a very good starting point. So we should start to see a lot of institutional investments happening in Kuwait. You must be knowing that on the mutual fund side, it's still not there in terms of mutual fund assets as a percentage of GDP for the country. We have so much potential going forward, and the primary task is basically to get the interest of institutional investors, and then you will see sophisticated products like ESG or sustainable investing automatically taking root as we see this trend in developed markets. I'm sure that is going to be the same path, whether it is Kuwait or other emerging markets.
Are institutional investors, I would imagine the answer is yes, already asking you about these factors, and what kind of conversations are you having with them to reassure them that that those considerations are taken into
Yeah, I mean, yeah, these conversations are so important, especially for emerging markets where information is not seamless. The sell side coverage of the markets are not that deep as we see in some other markets. So, in that context, the conversations become too important for foreign investors. So the only way they're going to be deciding on investing in Kuwait blue chips is to check it out with investment banks and other research providers to see their take on the company, both from a ESG perspective and a sustainability perspective. And that is where I think the narrative fits for foreign investors. Inclusion, MSCI inclusion, and the capital market reforms that has been happening for the past few years, I think should finally result in good research on blue chips coming out, and that would uh, increase the conviction of the foreign investors to come. Remember, market inclusion will definitely get you passive money, which is significant, but we should look beyond the passive money, and we should look at attracting the active money, which is so many times bigger than the passive money for emerging markets. So if we have to get there, I think this path is very, very important, attracting institutional investors. And ESG and sustainability is right at the center of that, actually.
Thank you. So an optimistic message there for the potential foreign investors listening to us today. So there was a series of other questions again about sustainability. I think we addressed that, how important is sustainability to investors in Kuwait, and Raghu of course mentioned that because local investors tend to be retail investors, then perhaps not so much. So Raghu was welcoming and inviting maybe even more institutional investors to bring that issue to the table. Another question about whether the panel thinks that Kuwait will maintain a stable sovereign rating, and I wonder whether any of you would like to tackle that, and then I'll move on to the last question of the panel of the session. So,
I don't see a problem Kuwait maintaining its ratings. We may have blips in terms of our fiscal management, but we should not forget the fact that from an economic point of view, Kuwait is probably the strongest among all the GCC countries. Be it the size of the sovereign wealth funds, or the size of the oil revenues, or from the twin deficit perspective. Yes, 2020 has been very bad, but do we have the financial reserves to withstand several such shocks? Definitely yes. So that's why I have no concerns about maintaining the sovereign credit rating. But having said that, we should take full use of such a high rating, and also we should make use of the probably a zero interest rate environment in terms of raising money for Kuwait. I think that's where there is no point having one of the best credit ratings, but you are not in the market raising funds.
Okay, what we've experienced so far over the past year is truly behind us. Raghu?
Yeah, as I said before, Kuwait is one of the few countries that missed the November rally, and it's also negative YTD for the year. So that makes me positive for 2021. There are defining movements like the index inclusion, which can, and also reasonably under control pandemic in Kuwait with the vaccine coming in. But we will still be busy bringing things back to normal in 2021, probably up to mid 2021, and then hope for earnings to come back and which will propel the market. So definitely, I am hopeful of a very positive 2021 on the back of not so positive 2020.
Investment in education and focus on education, that's your number one priority. What about you, Raghu?
Yeah, I think the most important thing, of course, I cannot deny about education, but what I feel is that, if you look at the expenditure profile of Kuwait between current expenditure and capital expenditure, I think we're very, very high on current expenditure, which is salaries, wages, and subsidies, and very low on capital expenditure. Um, the first challenge for us is to bring the economy back on the rails so that earnings can come back for companies and opportunities can open up. This can happen only on the back of increasing capital expenditure. I know the pandemic has imposed a deficit economy, but that deficit is coming on the back of higher capex rather than higher current expenditure. I think that will be good news for stocks listed in Bursa Kuwait, for foreign investors, for FDI. So everything centers around that. In economics, they call it as counter-cyclical move, like when the chips are down, the government pitches in with investments. I think that's exactly what should happen in my recommendation.
So this is all we have time for. I would like to thank our panelists for dedicating their time and sharing their views with the audience. I also would like to thank the audience for lively participation, lots of questions coming through, and lots of interesting questions. And now time to wrap up the panel, and very shortly I'll wrap up the whole morning. Thank you.